Hello, everyone, and thank you for joining us today. Due to the number of participants we have, phone lines will be muted for the duration of this webinar. If you have any questions throughout the presentation, please submit them using the Q&A tab in your toolbar, and we will follow up with you offline. All attendees will receive a copy of the presentation within 48 hours. I'm now going to go ahead and turn things over to our first presenter, Breanne Armstrong, Director of Insurance Intelligence here at JD Power. Breanne?
Yes, thank you, Carolyn, and welcome everyone. We are going to discuss the home insurance study to see what's driving customer satisfaction. We will jump into the agenda here and take a look. So my name is Breanne Armstrong. I'm the Director of Insurance Intelligence here, and I oversee our home insurance study. This study does cover both our home product and our renter's product as well. So majority of this presentation will focus on findings from the home insurance study, but we will touch on renter satisfaction too. Our agenda is pretty basic because we have a lot to cover in just these few topic areas. We want to give an overview of the home insurance study, some of the changes that have taken place, and the index model, just to kind of set the stage. And then we'll jump into a little bit more around the state of the industry, which will then lead into the role of transparency and communication in times of rate increases, and then talk about some of the key takeaways from a home insurance study. And then I have a special guest who will be joining us to talk about performance and best practices from top performing call centers, which will directly relate to our conversation today around our home insurance study. So stay tuned for that, and I'll go ahead and get started. So for the overview of the 2024 home insurance study, we're going to talk through our methodology, some of the enhancements, and then the new dimension model. So just to set the stage about what the study is, our home insurance study is essentially part of our suite of servicing studies here. So we have our auto insurance study, our home insurance study, and then small commercial, independent agent, and then our digital experience study. So this fits within our entire suite of products, and essentially helps give this perspective around the experience across the entire value chain. So we'll kind of talk through, we will touch on auto a little bit just to give some comparisons, but just to kind of give an idea of what the studies look like across the insurance practice here. And then just so everyone is aware, there are a lot of studies across the entire year that publish. Our home insurance study here, I just wanted to call out, this is a September publish. We have a lot going on this time of year, so a lot of great studies to keep tabs on and attend webinars for, but this is when our home insurance study usually publishes in September. And then just a quick methodology summary. Essentially, I wanted to get into some detail around, what we did this year in the study and what it focuses on. So, what is key is that our home insurance study focuses on the experience for both homeowners and renters, and it looks at the importance and impact of overall customer experience on satisfaction. We are using what we call a modular approach, where we have a core set of questions that we ask all respondents, and then those respondents, those homeowners and renters, are able to opt in and take additional sections in order to further supplement the responses for the survey. So we have a broad sense of what the experience is, but also kind of can look holistically at different aspects. The brands that are included in the study are really the largest insurance companies according to market share, and our qualifying respondents, they must be adults in the United States, have to be a homeowner or a renter, work with one of those home insurance companies or renters insurance companies. This study fielded from November of 23 through July of 24. So kind of a long fielding window. And for home, we have over 10,000 completes, renters, just over 3,600. So it's a fairly robust sample. We're able to get into some different segments of the population. As far as some additional information, just to give some perspective on some of the changes that have happened, and we'll talk a little bit more about those in a moment here. But the first one is that this is the first year that we are going to be using a dimension-based index model for our home insurance study. In the past, we've had our factor-based model, which had 5 factors, and now we have 7 dimensions. So we'll talk through that just briefly to kind of set the stage, and then it's something that you can always provide additional information if there's interest. Our dimensions are rated on a 6-point, fully anchored poor to perfect scale. And I mention this because when you look at the scores this year, they're going to look lower than in the past for our home insurance and renter study. And that's because when we change the scale and go from a 10-point scale that we've used historically to a 6-point scale, where every single point of the scale is anchored by a word describing the experience, it gives us better differentiation among the brands, but it also ultimately brings scores down a little bit because the top score is perfect. So just wanted to make everyone aware of that. Again, we can provide additional information about how we determine to do that and the impact that it has. And then factor scores are still available this year, and we'll continue to compute those. Those are actually still computed on our 10-point scale. So we do have those available for subscribers to the study, as well as the attributes that were used to compute the factors. So just wanted to raise awareness about that. We wanted to still have those scores available because we know a lot of people have tracked those scores over time, and can provide also some additional insight into the findings we get around the dimensions. And then finally, despite the fact we've changed our model, there is a lot that can be trended. So one thing that we're not trending in this study publicly is the overall satisfaction. So that's something that is available to subscribers. We have a bridging equation where we're able to essentially bridge the previous scores to the current score. So it can give you a sense of how performance is tracking. But a lot of other metrics like our key performance indicators, many of those can be trended. So a lot of opportunity to look back at the previous data and see how it has trended over time. So what exactly changed in the model? So right here I have the previous index model that was used for our home insurance study. So essentially covering some of the big components of the home insurance experience. So some of the different reasons that one would interact with their home insurer, some of the different documents, communications, the price that's paid, all these different components. And so very kind of specific to that industry, right? Very specific to the home insurance experience, which is still important, and we're still looking at these, but we wanted to be able to look more broadly at the experience and the relationship. And that's why we have moved to a dimension model. This dimension model is used across many industries now at J.D. Power. And it really allows us to not only do kind of comparisons across the industries because we have these consistent dimensions that we're looking at, but it also lets us, again, kind of look more holistically at the customer experience. So it takes into account not just the actual experience components, but more of that holistic emotional component, right? So when you see something like trust, trust goes beyond just that experience. Trust can kind of encompass a lot of aspects of the relationship and the perception of the brand. So a lot of our studies have made this change, and we are rolling it out kind of across the organization. And this is the first year again that we're doing this for our home insurance study. So what does that mean when it comes to the results? So in looking at the new dimension model, we essentially these dimensions are rolling up into our overall satisfaction score. There's no longer attributes that then go into each of these dimensions that then in turn are computed to make our overall satisfaction rating. These are just holistic measures, right? And so we ask all of the respondents these questions, and then obviously we have the full survey after that where we can get kind of behind some of these the dimensions and what's driving them. But ultimately you see here, when it comes to what is driving the overall satisfaction for homeowners versus for renters, there are some differences. So trust is the top driver of satisfaction for the home insurance study, while price for coverage is the top driver for rent. And so you can see that, kind of there's the inverse where price is second for home, as and trust is second for rent. So they both still, those dimensions play a very important role in both of the studies and the experience. But there are some slight differences. One I think is interesting is around kind of the product and coverage offerings when it comes to rent versus home, where home has the products are a little bit more complicated, while rent, maybe the simplistic style of kind of the products and what's included is might be kind of driving down the importance of that piece. So how does that compare to auto? So our auto insurance study, which published in June, also moved to the dimension model, and I think it's interesting to look at how it relates, because there are a lot of similarities in the performance of the different brands, as well as what is important to customers. And so trust is the top driver of satisfaction for our auto insurance study as well, and it matches up actually pretty well with home, interestingly. And then the second most important is price for coverage, so at 18%, so very close in importance on the auto side. Things like ease of doing business, are important across all of the different products, as well as the people involved. So a lot of similarities. But what does that look like if we look at the actual performance? And so what we did here is essentially compared all of the different dimension scores across these different lines of business and looked at how they compare. And what we see is renters' satisfaction kind of across all of the different dimensions tends to be a little higher. That's actually consistent with what we've seen historically as well. But when we look at auto versus home, we see some interesting differences too. So there are a lot of similarities, things like problem resolution, even trust. We have a lot of similarities there. But to get into some of the big differences, when we look at price, so price for coverage, what does that rating look like for that dimension across the different lines of business? And there's a lot of differentiation across the different products, right? So rent is quite a bit higher than auto, and home is on the lowest end there. So that's kind of the dimension where we see the most differentiation across the different lines of business. Now, the other one where we see a little bit of differentiation more with the rent side versus the home and auto is around that problem resolution. So when you think about the problems that individuals are experiencing, they might be a little more complicated on the auto and home side, which might influence that somewhat. But that is an area where there is a little bit of a gap, right, among the different dimensions. And then finally, which is interesting, is around digital channels. So despite the fact that a lot of these policies are being accessed via the same channels, yet we do see a difference. Home policies tend to be a little more difficult to understand, so digital channels might take a little bit of a hit, and as a result have lower satisfaction. But overall, the rent side again comes out on top as having the highest satisfaction with that digital experience. And then I just want to point out trust, because how close the rating for trust for home and auto are. So, it's interesting that they fall kind of in place. And when you look at the bundling experience, so those who have home and auto with the same carrier, it tends to, this trust score tends to be higher, but they still tend to be, kind of in line. So essentially, if you only have one policy with the carrier, it's going to be a little bit lower trust, but bundling does increase that somewhat, and I think that's part of the reason why we see the score kind of follow each other, because we have such high rates of bundling across these products. So getting into the actual rankings for both of the studies, we have our home insurance rank chart and our renters insurance rank chart. With you can see how much differentiation there is among the different scores. So the other thing you're going to notice is the scores look lower. So again, I mentioned earlier the change in the scale that we use impacts the score. So you're going to essentially see with the entire industry be driven down a little bit, and that doesn't mean that home insurance is worse than in the past. It just means that, as a result of the scale change, we are looking at kind of a different baseline here. So something to be aware of, as you're looking at the satisfaction scores that we show both overall and at the dimension level. So now that we've kind of set the stage with what's changed in the two studies, gave a little bit of a sense of what performance looks like, we're going to jump into the state of the industry. So what ultimately is the impact of these rising prices on the overall experience? How is this impacting satisfaction and the experience and customer behavior too, right? So just to set the stage when it comes to the actual the cost, right? So we look at our consumer price index trends here, and it's been really interesting to watch this over time and see how much homeowners and renters insurance costs have increased compared to the rate of inflation. So, this has been essentially on the rise, over the past year or so. And when we go back in time, I mean, this wasn't the case. So it's essentially homeowners insurance rate changes have also outpaced on the auto side too. So I wanted to also show this. So to give a kind of a broader view of what's going on in the industry right now. So this is obviously impacting rate increases. This is impacting customers' perception and the price that they're paying, and is leading to shopping increases. So, this is not a shopping study, but we really can't see the entire picture unless we look at this shopping behavior. So it's, ultimately it's impacting the customer experience, and it's going to have an impact on the entire market. And so what we see here is that, we basically have seen a divergence between why people are shopping. So in the past, browsing rates tended to be a little bit more of a prevalent reason that people were shopping. But now individuals saying their rate is too high, and this is specifically individuals that are shopping for home insurance, those whose rate too high has increased over the past few quarters. And, that difference when you look at the shift of my rate was too high away from just browsing rates, it's pretty dramatic over the course of, from Q1 of 23 to Q2 of 24. Another area too, though, that is interesting is around the shopping due to cancellation or a notice of non-renewal. Although it's still a smaller proportion compared to rate increases, it has increased fairly dramatically since Q1. It has more than doubled. At 3.6% was the reason individuals were shopping in Q1 of 23, and it's gone up to 7.5% in Q2 of 24. So we are seeing more prevalence of the non-renewal notices driving the shopping behavior, which ultimately is also going to have an impact on how customers are viewing homeowners insurers. So what does that all mean when it comes to price sensitivity? We have a lot more people shopping. We don't necessarily have quite as many people switching per se, because that has remained a little bit more flat over time on the home insurance side. But when it comes to the behavior around shopping and kind of the drive to switch, it's interesting to look at across the different carriers. So this here shows a list essentially of the home insurance carriers profiled in the study and the incidence of their customers who say they wouldn't switch for any price. And once you start looking beyond that, the customers who will switch for a price savings, there really isn't significant differences between kind of that high and low sensitivity tier. So if you look at, the green, which is kind of that lower sensitivity, versus the red higher, the amount doesn't matter as much. There's not that significance there. And so if we look at what's different then between these different tiers, so especially looking at the low sensitivity in green and the high sensitivity in red, so how likely are they to shop, there are some differences in some of the specific perception and kind of performance metrics across different attributes and different behaviors that these customers have. So One thing that's really interesting is the reasonableness of the payment and service fees. So this is also something that has really kind of bubbled up on the auto insurance side as well. And those who say they want to switch for any price tend to have a much higher rating in kind of that perception of the reasonableness of the fees, and also have higher ratings around competitiveness of the discounts offered. So we've seen discounts play a bigger role than probably ever in the past. We've seen essentially on the home insurance side, the break point for how many discounts are really going to give you a bump in satisfaction go from just one to now there has to be two in order to get that benefit, right, from the customer, right, to get that credit for that discounts that they're getting. And then we see, obviously avoiding insurer-initiated premium increases differ around kind of the price sensitivity. But then, when we look at something like likelihood to shop due to price-related reasons, those with that lower sensitivity are less likely to shop. So, when we think about, all the rate increases and how individuals are perceiving their insurers, the idea of this price sensitivity is, really critical, because you can reduce the sensitivity by different kind of performance metrics and things that you can do with customers in order to build that relationship and build trust and ultimately kind of meet their needs, right? So we'll get into that a little bit more, because you really want to get to the point where your customers won't switch for any price, right? And there are some different ways that we can kind of approach that. And so when we're dealing with rate increases, it's really hard to, get customers on board for sticking it out, right? And so the big thing is really around the role of transparency and communication. And we'll talk through some of this and some of the different kind of best practices and things that we see really have a huge impact on the home insurance side. So again, although this study includes our renters insurance study, this webinar really focuses strictly on the home experience. So just something to be aware of as we go through. So price transparency, right? So ensuring that customers feel that they understand their price, they feel that the carrier is being transparent about price increases. This can all have a huge impact. So one of the things that plays into that is the understanding of the reason for a price increase. And this has been a talking point for the past couple of years, both on the home and auto side, because it really does play a critical role getting out in front of these price increases, ensuring customers understand why they're happening, and ultimately it will help them understand what's going on in the industry a little bit to kind of mitigate that negative impact. So what I'm going to show here is this essentially looks at the effects of ensuring customers completely understand the reason for the price increase versus those who don't understand, and what that lift looks like in understanding, right? So if we look at something like likelihood to shop, right? So those who they completely understand the reason for the price increase are much less likely to shop. Right, so 27% say that they definitely or probably will shop, versus 41% who will likely shop when they don't understand. So there's a pretty big difference. So that setting that stage, that understanding, really has a big impact, right? A 14 percentage point difference. When we look at shopping due to a recent price increase, that we're looking at 30%. Among those who completely understood the reason versus 44% among those who didn't. And so, you can see there's a big impact there as well. And then multiple increases over time. This is also becoming a more prevalent issue too. When we look at likely shoppers, we're seeing more people being impacted by these multiple increases versus just looking at a single rate increase or the amount of that one increase. So you can see here another kind of big impact essentially when it comes to the understanding. And then looking at the would switch for price savings piece. So we see that again, those who understand why are much less likely to say that they would switch for price savings when they understand the reason for the price increase. But in addition to understanding, being notified is critically important as well. And so being notified in advance actually increases the understanding, right? It gives that opportunity for customers to, discuss the increase, ask questions. It ultimately reduces price sensitivity as well. What's interesting is the industry tends to focus on letters, right? So sending letters to customers is the most commonly used method. It's getting letters from both the agent and the insurer directly. Either of those methods really, it's better than nothing, but not nearly as effective in increasing the understanding of why the prices went up as having that actual phone conversation. So whether it's relying on the agents to do that or the CSRs to do that, that really can improve the understanding of why the prices went up. And again, improve price sensitivity and decrease the chances of the customer shopping. So thinking about how the notification is happening is also very important, not just notifying them and getting ahead of it, but being very in tune with how customers want to be communicated with. How else can policy understanding be increased, right? Because we're talking about the changes in price increases, but overall what we see too is that when customers understand their policy better, that also can have a fairly large impact on the overall experience and kind of that price sensitivity piece as well. And so this slide essentially we're kind of focusing on that piece and what the percentage point lift is and ensuring the complete policy understanding is based on some of these different best practices. So one that's really interesting is that ensuring the customer completely understands their bill can help kind of with that overall policy understanding. So it has a 59 percentage point lift in ensuring someone completely understands the policy if they completely understand their bill. So they really go hand in hand. And then the reason for the price increase, we're kind of back at that again, but understanding the reason for the price increase is ultimately going to help them understand their policy overall. And then policy review. So this has been a huge topic of conversation across the auto insurance study, and it's really something that's become very prevalent on the home side too. Is that offering individuals this policy review, being clear about what you're trying to do during that conversation, and then having customers accept the policy review offer, but then ultimately having an increased understanding. So on occasion, we do see customers who say that they accepted the policy review offer, but unfortunately, it didn't help with their understanding. So that's, that lack of effectiveness there can actually, really hurt the experience. So, it's really important that agents, CSRs really kind of, understand the best way to communicate this, and also to ensure, the different digital methods and other communication methods are helping improve this understanding. Because if the policy review increases policy understanding, it's going to have kind of that overall impact on the overall standing of the policy and the coverage. And then what's really interesting is thinking about the CSR and the agent's understanding of customers' insurance needs. So these are some metrics that we haven't looked at quite as much in the past, that this year really kind of became more prevalent when it comes to these types of conversations. So, helping customers understand the policy is one thing, but then fully understanding their needs, it makes the conversation, more tailored to what that specific customer needs and wants, and can help with that understanding. So when we ensure the CSR has a good understanding of customer insurance needs. Now, this is an agreement question, so customers are saying that they strongly agree that the CSR has a good understanding. That has a 32 percentage point lift on overall understanding of the policy coverage. And then on the agent side, we see a 30 percentage point lift. And so you can see here that the rate of CSRs having this good understanding of customers reporting that their CSRs have a good understanding is only 44% versus 51% for agents. So there's definitely a gap there. And so, the other thing too is that not only on the needs side, but also that policy review from a CSR. So when we ask about the policy review offer, we ask across all different methods. So any policy review is better than nothing, right? But what we do see is if a CSR does a policy review, it's not quite as effective in improving customers' understanding, and also, in improving kind of the understanding of the needs too. So, there's a little bit of that gap there that warrants, some additional kind of spotlight on within the industry, and what can be done to help empower CSRs to, better understand the needs and communicate that to the customers as they're, reviewing their policy with them. And what's interesting too is that we see when policy reviews are happening, it can help with the bundling behavior, product density. We've seen some interesting changes in bundling behavior over the past couple of years. And in particular, we've seen the number of total products that homeowners have with their insurance company decline somewhat. And so, since customers, what we're really seeing is they're increasingly willing to not bundle products, and so, how can insurance companies help improve this product density and continue to retain these bundlers who are essentially going to produce that kind of high value relationship over time? And we do see that policy review offers have an impact on this because it gives an opportunity for these conversations. And so, in looking at those who are, bundled currently with home and other products versus those who aren't, there's definitely, customers have these products. They're just not necessarily having them with their current home insurer. And so we also look at, kind of that likelihood to bundle as well, likelihood to get more products with that their home insurer. And so, there's definitely a gap here, and you can see that there's a lot of customers have annuity products, their life insurance through different insurance companies when they could kind of be bundling that together. And those kind of conversations happen during policy reviews, not just helping with the understanding piece, but helping increase the number of products, and also increase the perception that the insurance company understands the customer's needs and is doing what's best for them. With that being said, what are some of these best practices that can improve customer understanding? How does that impact the needs overall? So if we look at ensuring, we kind of go back to ensuring that the CSR has a good understanding of customer needs, and the agent, how does that impact things? And so if we look at ensuring CSR has a good understanding of customer insurance needs, we see that putting the interest of customers first can actually have a pretty big impact on the attribute degree to which the policy meets my needs. So these are all kind of interrelated, right? So if a customer feels that the CSR has met that expectation, then the overall perception of how much the policy meets the needs increases significantly. And so we see the same thing here, that degree meets needs improves by 1.5. So this is again on a 10-point scale. When agent and CSR makes an effort to understand that or ensure they understand my policy. So that's a little different than, do they actually understand their policy? It's are they making an effort to ensure that the individual understands their policy? And then also making recommendations that are in my best interest. So thinking back to the different product opportunities for bundling, making those types of recommendations on that side, as well as recommendations around the current coverage offerings they have, and different things that individuals can be thinking about when it comes to their home insurance policy. And we see the same thing on the agent side too. So you'll definitely get a big bump there. It's just that I'm calling out the CSR side in particular because that's where we see less of an understanding of customer needs. But really, there's a lot of white space across both of those metrics to improve. And then when we think about different information sources that can help with this, So around ensuring customers completely understand the price increase, ensuring customers completely understand policy and what it covers, what information sources can help degree policy meets the needs, right? And so, what we see is that if an agent or in the insurer's contact center representatives of the CSR or different marketing and education communications are used to help an individual understand their policy, that increases that perception of the policy, the degree to which the policy meets their needs. So, when we think about how are people trying to understand their policy, if they're talking to an agent, if they're going through the call center, or they're looking at those marketing educational communications, that is going to help with that perception of how much the policy meets their needs. Now, another issue too, or another thing to think about is around that claim piece. So if the customers who have a complete pre-claim understanding of the policy increases have much higher perception around the degree to which their policy meets their needs as well. And then finally, policy reviews. We kind of come back to that, but that again can help improve the perception around the degree to which the policy meets their needs and can drive up the satisfaction overall and improve understanding. So with that being said, just a quick kind of summary of what the findings are for the home insurance study here, around the price transparency, communications, and policy understanding. This all kind of is in the view of our new dimension model. So, we are thinking about, these different metrics a little bit more holistically. Looking at trust and price for coverage and stuff. So, what we do is, if you're a subscriber to our home insurance study, we give a more comprehensive analysis on how your individual performance looks, how it relates to the new dimensions, how these different aspects that I mentioned today relate to those dimensions as well. And then carriers who best manage the perception of the overall cost. So thinking about that, even the fees that are related, the how competitive the discounts are, and provide a better overall, will provide it essentially in a better overall experience, and that can help combat the effects of premium increases. So, notifying in advance is a big piece of that, obviously, but then ensuring that they understand why. We have seen that when insurers mention things like increase in severity of weather events and things like that, that can help kind of with the perception of the, why the rates are going up. So giving those reasons is really critical. Inflation has kind of, got a little bit of a hit. People, I think, are tired of hearing about inflation as a reason. So, definitely think about what the communications say and what agents and CSRs are communicating, because that can definitely play a role in that overall perception. And then, the methods of providing a policy review, whether it's the agent, the CSR, it's going through the website or that online method, all of those are fairly effective at improving policy understanding, but the agent and website reviews are more effective than what we see on the CSR side. And we also see that too on the auto side as well. So, agent and website reviews tend to yield better understanding of the policy versus CSR reviews. So again, there's an opportunity at the industry to better understand what is going on with reviews that are done by the call center and how that can be improved, and how call center reps can essentially be better empowered to answer those questions and to discuss the coverage options. And again, the last point here feeds into that as well, but it also comes back to the concept of how, the degree to which the policy meets my needs. So, understanding the policy can help customers feel that their policy meets their needs better, and agents and CSRs can help with those conversations and give the perception that they understand the needs of that customer, which then ultimately can help increase the perception of how much the policy meets their needs. And so we have multiple sources here at JD Power. We're working to enable and motivate agents and CSRs to deliver the best experience to their customers. I actually have on the call today, an expert on the call center side, Mark Miller, is going to join us, and he's going to talk a little bit more about this concept, because there's a lot of opportunity on, with this particular channel and improving the overall experience.
Thank you, Breanne. Appreciate that. As Breanne mentioned, my name is Mark Miller. I'm the practice leader here at JD Power for the Customer Service Advisory Group, and we work across all industries. And we're excited today to share some of the data that we have collected from this study and comparing it to what we find in top performers, and we'll get into why that's important here in a second. But the goal of today is to really leave you all with some practical things that we're seeing across industries as it applies to your particular situation, how CSRs influence the overall satisfaction with your organizations as you service your customers, and really help you get to the next level of performance, as we've seen some big changes in what customers are looking for. So we'll put all of that cross-industry data in context of what we found in your data, and then hopefully we can, as a result, walk away with some interesting insights that will help your business improve. So we're going to do that by just giving you a quick level set and overview. So I'm on the right side of the page now with the customer service advisory overview. That'll level set you as to where we're coming from. We will show your data in comparison to top performers and derive some insights, maybe make some suggestions, get some thought starters for you. And then we'll end with what we're seeing right now and where we see the industry going. And it's very apropos for you all in your environment. So that's winning the customer service battle. So let's jump right in with an introduction with our company. So, of course, everyone's familiar with JD Power. What many people aren't aware of is because we collect all of this data across all of these touch points, JD Power for the last 20 years have actually been able to create this customer service advisory group. And so our mission is to enable brands and their organizations to optimize the experience of every customer interaction. So everything you see on the left-hand side are channels that we have data on, where we're able to identify what it is that the top performers are doing. And then in the middle, we look at those interactions in context of the journeys and touch points. And we also have data on the right-hand side pertaining to face-to-face. But of all of this, all of these dynamics that you see on the screen today, we're really going to focus on the service end and the voice end. So this is live phone data that we're going to share with you today. And when we share this, understand what our perspective is, which is across industry. So if you look on the left-hand side, customer satisfaction, of course, is this nexus between customer expectations and provider performance. So as customers interact with different providers, they start getting exposed to better and better experiences. And so across all of these industries, whether it's working with folks like you on the phone, or in other elements of insurance, or in healthcare, or in financial services, or in any of the myriad of industries that we work with, as customers interface with these service organizations, they keep getting better and better service along the way. And as a result, their expectations are essentially created. And so what happens is that a great experience anywhere influences expectations everywhere. So the data that we're going to share with you today, and some of the best practices that we're going to share with you today, is built on that notion that in order for any brand to do well and exceed customer expectations, you really have to know what the expectations are from your customers. And that's particularly true when you look at discrete channel interactions. So that's the basis of our customer service advisory practice, is that we have this very unique data set built across many, many customer satisfaction studies, over 1,000 brands, that help us really understand what good looks like. Then through our certification program, we've been invited into these top performing operations, and we've been able to essentially correlate what specific actions, policies, processes, practices that are in place at these top performers with top performance. And so we've codified that into these best practices. So you see that there's now over 300 of these. When we first started this program back in 2004, we started off with about 100 practices, and now there's over 300 across 23 categories. So that just gives you all a level set that we're looking at this across industries and finding out what top performers actually do. So when we now look at the data that Breanne has presented, we're kind of doing this in reverse order. So we're counting down across industries now, because that's our perspective for this phone interaction, where people are just saying, hey, I had a great experience somewhere else. That's my expectation. How does this interaction compare to that? That's what we're doing here. And you all can see that for this industry, there is actually a gap, a pretty significant gap, between how top performers score on this concern ratings. This is a 1 to 10 scale, with 1 being unacceptable and 10 being outstanding. And you can see that insurance is short compared to these top performers. Now with you all, it's particularly important to demonstrate concern with your actions. Concern is obviously has a lot to do with soft skills. So you can see that that's a bullet point on the left for your organization to think through. And doing that with the soft skill in the context of expertly explaining the policy and the policy reviews is going to combine to help you all do better on this particular attribute. When you see a gap like this, if you've got a low concern, it doesn't necessarily mean that you aren't doing things technically correct, right? You could be saying with your words statements that connote concern, like doing active listening. But if that emotion isn't there and there's not a actual connection, that is, which the data here, especially as we go through this slide, you'll see that you all, from a pure technical standpoint, are actually very good. In fact, as an industry, you all do pretty well. So you score definitely above average. And when you compare your technical behavioral performance on the phone with top performers, you do very, very well. So it's really not a question of what you're doing. It's a question of either how you're doing it or how it's being executed at that moment of truth with your frontline reps. And so when we see data points like this combined with good scores, like a concern driver operationally would be asking customers to repeat information. This is actually a huge driver that when customers perceive that they've been asked to repeat the information, the score plummets. In some cases, it's individual client cases, we've seen it as much as over 300 points on a 1,000-point scale. So there's a very severe penalty for this. But you can see that last year, 82% of the time, this did not happen. So you're only asking customers to repeat information 18%. Compare that on the far right-hand side to top performers at 16%. And so you can see that you're doing pretty well here, but yet in the previous slide, you can see that there's a gap. So again, we have to ask the question, what's going on? And it seems to indicate to us at a very high level that for you all, you can shore that up by ensuring high levels of engagement, because you're, from a purely technical standpoint, and some of the other things that we'll share here with you, you'll see that you perform quite well, but yet there's this relatively big gap. You can see that here with courtesy. What's so fascinating about courtesy with you all, you can see that a gap exists, but if you look at this next slide that shows how you do for some courtesy drivers, so these are the behaviors that we see, you all outperform the top performers. So again, you're very good at this. You're also very good at thanking customers for their business. That's at 96%. That is at parity with top performers. So again, it's pointing to not what you say, but how you say it, because your overall courtesy score is lower, and yet technically you're doing the actions that should indicate a higher score if you were connecting. So there seems to be some sort of gap here, as mentioned, around the connection between you all, and we see that happen most often with unmotivated agents. So that quiet quitting phenomenon that many of y'all may have experienced, where your individual rep attrition may have leveled off. It's likely still higher than it was pre-pandemic, but that belies the fact that you have folks working there and they really aren't motivated, they aren't engaged. And that's a phenomenon that we're seeing across the board, and the data seems to indicate that that might be an issue. So we would say to you all, pay particular attention to your agents, and in particular, pay attention to your supervisors, because that drives a lot of agent behavior. Promptness in getting to a rep, a little bit closer here to top performers. What's interesting is that promptness in getting to a rep actually has been reduced in importance over the years. Not going to spend a lot of time there, but just to put it, in context, it recently was the number 2 driver. It dropped down to number 3, and the number 2 driver now is knowledge. And so knowledge has moved all the way up to number 2. In enterprise technology companies, it's moved from number 5 to the number 1 driver. We're going to spend a bit of time on knowledge, but just know that for you all to compete and win, that's going to be an area you need to focus on. Again, you all have a gap here to knowledge, but yet from a pure driver standpoint or behavioral standpoint, you do very well. You compare very favorably to top performers. So what is it that's creating this knowledge gap? You can see here timeliness resolution. It's the number 1 driver. It has been for pretty much the last 20 years. And this really covers both the time that it takes to complete the transaction, but the primary driver is resolution in and of itself. And you all do very, very admirably here. Now, this is probably, the kind of sums it up, is that despite the fact that from a behavioral standpoint, you're very strong, overall CSR satisfaction is not as strong as top performers. So this again speaks to us, hey, level of engagement at the representative level. And our advice to you is to, of course, focus on the rep engagements. There are tons of best practices around that inside our best practices scorecard if you're interested. But the long and short, the fulcrum that we see that this particular problem hinges on is around the supervisor. So focusing on the supervisor and getting them trained up, reduce their supervisor to rep ratio, and give them enough time to build relationships with your teams, which are very likely either all virtual today or hybrid. That will pay off. So those are some behaviors that we've seen these top performers do. Now for you, just to sum this up, you have to have these elements on the left-hand side inside your industry, especially relative to other industries. So it has to be seamless, fast and easy, proactive, relevant, and personal. And as Breanne mentioned, that really means for you, you have to weave in great, very solid policy understanding and ensure that the customer understands the policy. Your CSRs have to be able to explain those price increases. And what that really points to is for you all to compete and win, you have to over-index on technology and training that allows you to understand the customer's needs, which then drives your suggestions and your interactions with them as being both relevant and personal, because that is where the battle is going to be won at the bottom. It's this personal interaction that is spot on, relevant, it's proactive, you're operating in their best interest. That's what customers want to see. Now, the way that that is going to come about is through this notion of knowledge. So as I mentioned, knowledge is the number one driver. And, or I'm sorry, it's the number one driver in some industries, in this industry, across industry rather, for customer service, it's the number two. But that is where brands are going to separate themselves in order to make proactive, relevant, and personal suggestions as we're transitioning away from transactional. I know we've been doing this for years, more into relational. That's where we've been over the last few years. Now to consultative, where we're putting ourselves in the shoe of the customers, we're understanding their environment, their needs, and we're making proactive, relevant, and personal recommendations that benefit the customer. That is the new standard. So for you all, as service providers in this environment, in order for you to be successful, that means over-indexing on all technologies that enable the agent at the moment of truth to be proactive, relevant, and personal when you're reviewing the policies, when you're explaining why the rate increases are coming, and when you're making suggestions. So hopefully this has been helpful to you, and I'll turn it over to Carolyn.
Great. Thanks, Mark, and thanks, Breanne. We do have some contact information on our next page. So if you want to reach out to anyone on this page, please feel free with any questions or any comments about the materials presented here. We're also going to be sending out a copy of the slides and the recording by close of business on Thursday. Thank you again to everyone for joining us, and we look forward to connecting with you soon.